Hello and welcome to Beat the Street, the show on IGTV that gives you all the tradable news and data ahead of the Wall Street Open. Well, coming up on the show, in US earnings, we hear from Coca-Cola, Cisco, Airbnb and Lyft, among others this week. There's also a raft of economic data on the radar of investors, including the latest inflation figures, retail sales and jobless claims, to name a few data points to watch this week. And oil prices have started the week in the red, with both Brent and WTI trading lower on the day on hopes of a diplomatic solution in Gaza. Well, good afternoon. I'm Angela Barnes and welcome to this edition of Beat the Street. Well, not long now before Wall Street opens, so let's have a look at how equity markets are doing before the bell. So the US 500 S&P is currently set for a rather flat start, and also the Dow Jones too, just currently up marginally 0.11% on the day, and the tech-heavy Nasdaq has just edged higher up 0.01%. So a hesitant start to the week. US stocks gained after the S&P 500 crossed the historic 5,000 milestone for the first time during intraday trading last week. Now, that record-breaking session came as investors applauded a revision of December inflation data that showed it was even lower than first reported. Waves of well-received quarterly earnings also buoyed stocks as well, with big names in tech powering a huge chunk of market gains. Well, here's IG senior market analyst Axel Rudolph with more on that S&P performance.
Well, Angela, the S&P 500 is fascinating at the moment as it keeps on rising. It rose, I think, 14 weeks out of the last 15 weeks since the end of October, and did so despite strong US employment data. And we'll have to see, now that we're trading above the psychological 5,000 mark at around 5,030, a new record, all-time record high. Can we continue on this upward trajectory as US inflation data is coming out tomorrow? So perhaps we might see some short-term profit taking, with some investors getting nervous, or perhaps we will just continue to surge higher. But usually what tends to happen is that markets might consolidate, at least short-term, around round numbers. I wouldn't be surprised if this were to happen again this time around. But if we look at the chart, what we can see here very clearly is that we are remaining in a very, very clear uptrend. And right now, the momentum is not even slowing down on this uptrend. If I look at the pace of the ascent we've seen over the last few weeks, you can see here, yes, the candles are getting smaller, which tells us that perhaps we will lose some upside momentum in the days ahead. But every time that happened last week, we had another surge higher, and then consolidation against small candle, and then another surge higher. So perhaps today will be just one of those days where not much goes on ahead of tomorrow's inflation data. But then we might see another one depending on what the inflation data is like. But if it doesn't surprise negatively, then the S&P 500 could head higher towards 5,100 even. So from a technical perspective, there's really not much to say here. As long as we stay above the last reaction low, that's to say a low which is lower on the daily candlestick chart than the one to its left and to its right. And the last one we saw was actually made at the end of January at 4,842. As long as we stay above there, the long-term uptrend continues to point higher, and the trend is your friend.
Thanks very much, Axel. Well, there's a few bits of economic data to keep across this week as well. Let's take a look, starting with a Tuesday, 1:30 p.m. We have CPI data for January. Prices are forecast to rise 3.7% year over year and 0.3% month over month, from 3.9% and 0.3% in December, while core consumer price index is expected to be 0.2% and 3.4%, from 0.3% and 3.4%. And then on Wednesday, we have US EIA crude oil inventories for the week ending 9th of February. Stockpiles fell by 3.1 million barrels in the preceding week. We'll be keeping across Brent and WTI. We'll come back to look at how the oil charts are doing as well later on. But first of all, as well, let's have a look at Thursday, because at 1:30 p.m. we'll also have US retail sales for January and initial jobless claims for the week ending 10th of February and Empire State Manufacturing Index data for February. Sales are expected to rise 0.4%, while jobless claims are forecast to rise to 220,000 from 218,000, while Empire Manufacturing Index is seen as rising to -19. And then on Friday at 1:30 p.m., we have US Producer Price Index, PPI, data for January. And then as well, we've got a forecast to be 0.1% month over month from -0.1%. And then as well on Friday at 3 p.m., we have US Michigan Consumer Confidence data for February. It's preliminary. That's expected to rise to 79.5 from 79. And then also this week, there's a lot of US earnings to keep across because we are coming towards the end of the US earnings season of the year. Still a few large companies, though, yet to report. So let's have a look at a few of them. We've got Coca-Cola, Airbnb, Lyft, Robinhood Markets on Tuesday. We've got Cisco on Wednesday, Kraft Heinz, and then Thursday, Coinbase Global. Now, talking of Coca-Cola, well, it's expected to record stronger sales and profit growth in the fourth quarter. Analysts are expecting net income to advance 10% and revenue to go up by 7% to around $10.8 billion. And analysts are also expecting earnings per share to increase 4 cents to 49 cents. Investors will also be expecting keeping across unit case volumes to see if consumers continue to accept higher prices from inflation. And if we have a quick look at the Coca-Cola price chart, it's an all-session stock on the IG platform, currently up 0.8% pre-market on the day. In 2023, Coca-Cola's share price fell 7.4%, but year to date, it's gained about 1.5%. And then Airbnb is also expected to post quarterly earnings of 0.69 cents per share and revenue of $2.16 billion, up 13.5% from the year ago quarter. And if we just move over to the price chart for Airbnb, also an all-session stock on the IG platform, well, it's currently up on the day ahead of the bell, 0.45%. Year to date, its share price has gained about 8.5%. And then as well, if we move over to Lyft too, because it's pegged, revenue is pegged at $1.22 billion, indicating a 3.6% year-over-year rise, while oil prices are likely to have elevated operating costs. And if we just look at the price chart here, you can see that the all-session stock currently down on the day 0.23% at the moment. Year to date, its shares are down about 18%. So there's a lot of economic data and earnings to keep across this week. Let's bring in Liz Durking from Tasty Live in Chicago. Liz, good to see you there. I hope you're not too tired from watching the Super Bowl. And in other news, so what are you excited about with all this economic data that's due out? What are you particularly watching?
Angela, thank you very much for having me. It's always great to see you. So we would be remiss if we didn't bring up the Super Bowl first. So I have a little fun fact for you. So yesterday, the Kansas City Chiefs, or Taylor Swift's boyfriend, won the Super Bowl. And the stock market, how you play this in the stock market is if an AFC team wins, typically that year is a down year. Now, granted, there is no tradable evidence on this, but it's been since 1978, and it's got a 72% accuracy. So that being said, the stock market's got a lot to fall, considering what you were just talking about, how the S&P crossed the 5,000 level for the first time. But with Kansas City winning, we're supposed to be a down year. So we're going to fall from higher prices.
Oh, well, we'll have to see then, Liz. Well, thank you for that. So Kansas City Chiefs, Taylor Swift, all of those things moving markets, as we know. But Liz, what about on the corporate front? What are you excited about with earnings? Who should we particularly be looking out for this week?
Okay, the actual things that can move markets is what you want to talk about instead of fictitious things. But yes, this is a big week. So, I mean, I know there's a lot of economic data, as you had said. I mean, I think most traders are going to be looking at the CPI tomorrow, which is about, 8:30 Wall Street time when that comes out, because that's the inflation. And then the other thing would be retail sales. Those are the two numbers that we're going to kind of be looking at, only for two reasons. Because of the big earnings that are this week, the retail sales and the inflation data are the two that I think can move the market. Earnings, you still have some good ones. You mentioned Coke. It's pretty interesting because last week they took a hit with Pepsi because Pepsi earnings came out, and whatever they said for the earnings, the stock went down, and Coke went down kind of in solidarity with Pepsi. So you'll see the two of them trading in tandem a little bit together. But there are some big ones. I personally am looking at DraftKings, maybe just because of the Super Bowl. So DraftKings and Robinhood are the two big ones that we'll be keeping an eye on this week.
Brilliant. Liz, thanks very much for that update. And it's great to see you, and we'll see you again soon.
Sounds good. Thanks. Take care.
Thanks very much. So let's have a look. So that's the update there from the US and from Liz Durking at Tasty Live. And let's have a quick look at commodities to see what's happening with oil prices. This morning, it was trading lower, and let's have a look how it's doing. First of all, let's start with Brent, currently down 1.07%, trading around $81 a barrel, so lower than it was earlier. And then as well with US crude WTI, also lower on the day, down nearly 1%, $76 a barrel. Well, oil has declined following last week's advance after Iran's foreign minister flagged the Israel-Hamas conflict could be moving closer to a diplomatic solution, suggesting a decline in supply disruption risk. Also, on the bearish side, the Fed signaled once again it had no immediate plans for rate cuts, which is likely to keep oil prices range-bound as well for the time being. Let's just have a quick look at gold as well. Currently down on the day, just slightly 0.1% there, around the 2020 mark. Well, the Fed rate cut uncertainty also keeping US dollar bulls on the defensive and lending support to the yellow metal. Traders will also be keeping across the US consumer inflation figures mentioned earlier there, and on Tuesday for more direction. So that's all we've got time for today on Beat the Street. Thank you very much for watching, and do keep across all our IG social media platforms for market insights and updates throughout the day.